Back to work, back to work. Hope you guys had a fantastic day, but it's time to get back to work here. Get ready for tomorrow. It's Wednesday evening. It's the 27th day of April, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades setting up for Thursday's trading session. And man, I got a great video for you guys tonight. Tons of great trades setting up for tomorrow. I'm going to cover all my favorite trades in tonight's video. That way you have a roadmap to make some money tomorrow. Before we jump in though and get our hands dirty on these charts, Thursday is looking really great tomorrow morning in any of these markets. Before we jump in though, make sure you subscribe to our YouTube channel. I publish this video with my best trade ideas every evening on this YouTube channel. So make sure you subscribe, hit that little bell icon, that way you get notified every time we publish something new. Also, if you guys have any questions for me, drop those questions in the comment section. I would love to answer any questions that you might have along the way. And if you enjoy the video as much as I enjoy making it, if you tune in every evening to get that mind right and get those charts right for tomorrow, hit that like button for me. Appreciate you guys carving some time out and joining me every evening here on this video newsletter. But enough of the intro though, right? Let's get ready for Thursday. Thursday is looking pretty darn good because we have we got a lot to talk about tonight. Got a lot of ranges on these charts. Range on the crude oil, range on the Nasdaq, range on the S&P 500. Boy, you know me, whenever we have a range-bound market, we're trading rotation, we're trading pendulum swings, we're trading failures, and it looks like maybe some nice big juicy breakouts after that choppy session that we saw today. Got a lot of great setups, both long and short, across Emini, Nasdaq, and crude oil. Now, tomorrow is a Thursday. It's not your average Thursday, though. Let's make sure we quickly double-check here on the news reports for tomorrow, because as we've been talking about this week, we of course have, tomorrow is your typical Thursday in the sense that we have jobless claims, but tomorrow, the big news tomorrow is the GDP report tomorrow at 8:30 Eastern time. That GDP report will obviously be the big news tomorrow, big headline news tomorrow at 8:30 Eastern time. We also have a bunch of earnings scheduled for tomorrow. We have big names like Twitter and Apple and Amazon and Intel. As I've been kind of warning you guys about all week this week, we have Wednesday and Thursday this week are where some of those biggest headline earnings reports are going to be coming out. I'm sure a lot of that is what contributed to the choppiness that we saw today. And it may bleed into some choppiness that we see tomorrow. But I think when you look at the charts tonight, you'll see why I'm pretty excited for tomorrow's trading session. I think today's choppy markets may definitely expand into some nice big trends for us here tomorrow. It's also important to remember, too, that we also have the end of the month coming up next few days. We know that the end of the month usually does contribute to some increased volatility. So, be aware of that. We're definitely expecting to see increased volatility until the end of the week. And then, of course, into the beginning of next week as we kick off the brand new month of May. So the most important thing here for tomorrow is get that GDP report at 8:30 Eastern time. We do again have companies like Twitter reporting before the open, Apple, Amazon, Intel reporting after the close. So just be aware, right? We may see a little bit of a rocky day tomorrow like we saw today. Hopefully I'm wrong. I really hope I am. Again, I think when you see the charts tonight, you'll see why I'm pretty optimistic for some nice strong moves here across all three of our favorite markets. But GDP is definitely the big headline news for tomorrow. We're not going to hear any Fed speakers tomorrow. We are in the lockout period ahead of next week's FOMC announcement. So there won't be any Fed speakers tomorrow. We can pretty much guarantee that. Will we hear any new headlines out of Ukraine? Will we hear anything more about earnings? Those are things we're watching for tomorrow in our trade room. And don't forget, we're going to plan our trades tonight, and we'll trade that plan together tomorrow in our trade room. We open up at 8 o'clock Eastern time. Come out and join us. If you're looking for a place to learn and trade along, you'll love that trade room. I'll put all the links you guys need in the description of this YouTube video. Let's get back to the charts though, right? Back to the good stuff. Where's the money for tomorrow? Now, I got the S&P, got the Nasdaq, got the crude oil, all set to go here. Whether you trade one of these markets, great place to begin your career, or you trade all three of these like we do in our trade room, I'm going to cover my favorite trades on each of these markets. You'll learn something new throughout the entire video. I'll provide different trade variations, different setup ideas, different reversals and breakouts. So I'll tell you right now, if you're committed to your trading, You're going to learn there'll be new things to learn throughout the entire video here tonight. And you know me, I do try to save the best stuff towards the end of the video as we wrap it all together. So I'll give you a reason to stick around all the way to the end. We're going to go 1, 2, 3, S&P, Nasdaq, and crude oil, right? You better not click off here, right? We got good stuff waiting for you all the way to the end. Let's jump into the S&P first, though. What's the most important thing affecting the S&P 500 right now? Boy, what an interesting chart that we have here on the E-mini. This will be a real treat for you guys tonight because we have something here today that we don't really see very often. Now, of course, we had that big move down from yesterday, and we talked about how a deep pullback and a range was likely at some point today, and we pretty much got both of them. We saw a really deep pullback, of course, as the market pulled back, and the sellers, of course, failed to retest those lows that turned into a trading range. But most important thing, though, what's the most important thing affecting this market? There really are there are two real key components here. One is, for the most part, it's a bull market into a trading range is basically what this is. And what I want you to see what this is ranges are magnets. Ranges are balanced areas on a chart. So price will rotate back and forth. Usually the amount we go above is about the amount we go below, and the market rotates. Well, look what happened. We go up above the high of the range, we then rotate back down, but you see what happened? They failed to complete that pendulum swing, right? This kind of rotation. We failed to complete what really could be a big triangle rotation. That failure, that failed rotation, in my eyes, is a pretty, well, let's put it this way, it's not a very bearish clue, is it, right? They get that failed rotation off the high. You know, you would think we would have ended up down around these lows here, and we definitely didn't. That's a very bullish clue in my eyes, a failed rotation for the bears. But then what's really cool about this chart, and I guess cool will be kind of a technical term for this, is you'll notice we actually had a bull move up into another trading range. So now we have a trading range with a bull bias. And see what's happening right now? We're pulling back below that trading range, and now we are, as we call it, rotating off the low of that range. Now, if history repeats itself, if this range kind of continues to work correctly, it should continue now and kind of spit itself or break itself out and kind of slingshot up through those highs. I'll tell you right now, this from what we can see right now, you know, all things equal, this looks like a very bullish environment right now on the S&P. What a difference one day can make. Isn't that incredible how we can be such a bear market yesterday, but then all of a sudden, right, the bears can't retest, the buyers can fend off the bear rotation, and all of a sudden now, I'm not saying we can't sell this market, but it sure doesn't look easy to be a seller right now, doesn't it? Why would I say that? Well, think about what we're getting right now. As the market goes higher, do you want to sell into that rotation? Well, we can, but we have to be very careful. That's not going to be a very easy place to sell. And if we go lower, now we're back at support right below a trading range. I'm not really interested in selling down there either. So we get a lot of options right now to be a buyer. Buyers would love to buy a bounce off of that low right now. Buyers would love to buy a big breakout going higher here. What about the bears do? What would the sellers want to do here right now? The sellers have to go up and retest this high and then try to finagle a way to short this thing back down in. This could be a little bit tricky for the bears. Not my favorite trade, but definitely something we'll be looking at here tonight. And then again, if we do go lower, the bears really have to push lower here below that 41.36. And then here's the big problem I see with the bears. Look below us. Oh my, we're right there. There's not a lot. I'll tell you right now, this going lower is not going to be easy for those sellers because there's a very small spot down here to be a seller once we get that breakout. Now, wait till you see the NASDAQ. The NASDAQ is very different than this. NASDAQ has a ton of open space on both sides. So it's a very good comparison between the S&P and the NASDAQ. So again, very bullish right now. Obviously, it's a long-term momentum bear market right now. But the way this thing sets up here, it's looking like the easier money right now will be on the buy side. So how do we trade it? How do we buy it? How do we sell it? As we go higher, right? As we go higher, this is where we start thinking about basically some breakout patterns going higher. There are a couple breakout patterns I'm looking for as the market kind of slingshots going higher. I'm going to cover a couple breakouts here. I'll cover a few more on the Nasdaq, and I'll cover a few more on the S&P, right? I'll give you a reason to kind of stick around to learn all of them as we go. There are two breakout patterns I can see that will work really well in this situation. One is basically a 1, 2, 3 breakout. Let's say we go higher here, we pull back to that moving average, and we jump off that moving average. Now remember, it doesn't matter how strong that move up, right? We didn't hold it there, didn't hold it there. If buyers can hold that pullback and really jump off that moving average, now we have what's called a 1, 2, 3 breakout. And if I can get that 1, 2, 3 breakout, they can get a good jump off the EMA. Now what I can do is I can go in and find a new channel. I can drill down and I can grab, like for example, I always look for traps off the lows of those channels. That'll get me underneath a moving average. I can look for a failure pattern, right? Or a pullback pattern combination. Now, where would my target be on this? The pendulum swing is obviously a very easy target, but to fine tune that target, think about the size of that breakout leg or that first leg, and that will be used to really fine tune that final target as we go higher. I would assume the buyers want to get up around this area. That 4,300 is a major prior top up there. So 4,303, 4,300, very, very reasonable spot there for those buyers to grab a 1, 2, 3 breakout, find that new channel, and then buy that first pullback off of that low. Another breakout pattern I have my radar going higher, and we'll be talking about more of them as we go deeper in this video. Another breakout pattern will be a pop and grind. Let's say, for example, now we pop up, we start to grind higher, and as that market grinds higher now, all of those sellers who were short yesterday, that's what will cause that grind. And when we get that grind, now we know exactly where the entry is. We can mark off the high nice and tight, right? Don't waste your time on big channels like this. Draw it nice and tight, right off those highs, bring it down to that major low. And then again, I like to look left, find some of these prior swings, get underneath a prior swing, and then usually when you get underneath those prior swings, you'll be under the moving average, the trap pattern, the failure setup off the EMA, and then that first pullback to the moving average as we go higher. And again, think about that 4,300 area as the objective. So we call these pop and grind, right? Kind of pop and grind up, draw that nice tight trend line, anchor off those lows, and then be ready for a trap setup, a failure setup, a pullback setup, maybe a strength trade coming off of that pullback. Now, guys and gals, I know most of you watch this video every evening. You've taken the free trading course. You've learned all the setups. You know the rules. You're trading them on your own account right now. But if you're here for the first time right now, and again, I know most of you guys have grabbed that free course. I've seen so many great emails from you guys last few weeks. But if you haven't taken that free trading course, if you haven't learned all the rules yet, so you know the patterns, you know the entry techniques, what I'll do is I'll put a little pop-up here for you in the upper right hand corner. Grab that little pop-up and take the free trading course. If you hate missing the best trades each day, or if you're sick of taking so many losses, you're making too many mental mistakes, or maybe you're trying to transition into full-time trading from a full-time job, that'll give you a perfect roadmap to follow to help you start making money on your account. That way, the next time I say 1, 2, 3 breakout, or I say pop and grind, you'll know exactly how I find the channels, the time frames I use, and most importantly, the entry techniques we use, right, to find the best entries off of those lows. So make sure you grab that free trading course in that link in the upper right hand corner, and you're going to love that class. Got a lot of examples of those pattern setups as part of that free class. Now, how do we sell this market as we go higher here? What is the best way to sell? Well, let's first kind of go back and look at this from before. Remember, every time we see a strong move in one direction, we expect a retest, and then we can look for the short from there. So if I go up and I get a strong move back up to retest this high, What I have to worry about now is the buyers are going to keep on coming. They're probably not going to give up without a fight. So the best way for us to sell off this high is going to be to wait for it to go up, wait for the market to pull back, to retest that high, and then, well, just as we saw back here, strong move up, retest the high, one try, two try, failure back down. That's the pattern we're looking for over here. What you have to be careful with right now is this is a lot of momentum rotating off this low. So as we go higher here right now, I do not want to just simply try to step into that freight train just because it's a level of resistance. The ideal setup here for a short off those highs, because of all that momentum, again, is to wait for it to double top and then use one of our favorite setups, that two-try failure. Let those buyers try a couple times. We back this thing into the future a little bit, right? We go up, we pull back, we retest that high. What do we always say? Mission accomplished. The buyers are going to want to buy that pullback. If they can't get it to break out, there's your 1, 2, 3 breakout. If they stall out at those highs, now get those buyers to try a couple times. Let them try once, let them try twice. These are the weak hands. These are not professionals buying. The pros are buying down here because they know momentum is on their side. These are the weak hands buying at this point. Small stops, small accounts. Their stops are now sitting right below that low. My range below me is a magnet, and I'm shooting for that range going lower. At this point, the buyers are roped in. I can use their pain. I can use their stops right below that low as fuel. Usually we use momentum as fuel, but we don't have momentum on this. We need something else to give us that edge, and those stop losses are what will do it. That leads into a failure setup. And then remember, as we go lower, find that new channel off those lows, grab off that high, and then it could be any of the price action setups we learn in that free trading course. Maybe it's a trap setup, a failure setup, a pullback combo off that first test, off that channel. So again, it's a two-try failure. I would really be careful though. Wait for that up and double top, and then 1, 2, drop that failure, back down into that trading range, mark up that new channel off that low, and grab that first test, of course, with the appropriate setup that you learn in that free trading course. That's what I'm looking for here as we go higher here for a breakout or to short off of that high. Now, as we go lower here, going lower, not going to be easy to be a seller. As we rotate lower, I love the idea of a buy down here. What I don't love is how bearish it's going to be. One of the things we talked about last night was how the strength of that move down was likely to produce a retest of that low, and then we can start looking for those buys going back higher here. Again, we had the deep pullback, but it never retested that low. It wouldn't surprise me if the market went up, took out that low, and buyers gobbled this thing up and ripped it higher back up into that trading range. The challenge we have though is it's going to be very bearish by the time it gets back there. So as we get down to those lows here, this is exactly where we use that two-try failure pattern. We let those bears try once, we let them try twice, get those sellers roped in, let them dig their own grave down there. It's a support area, pendulum swing, major low, ranges are magnets above us. Once those bears foolishly commit on that break, on that kind of pullback area there, now I know where their pain is, and now I can look to buy right into those stop losses. That is a beautiful spot for a two-try failure. And then remember, the party is just getting started now. Now, there probably will be a trend line coming down overhead here, so you will have to be aware of that trend line. But the overall idea is pretty simple. As the market now runs higher here, where does the market want to go? It wants to go back to the other side of that range, and it wants to take out those other side highs, right? The pendulum swing will swing back and forth again. The point I want to make here is that you can now grab a new channel, drill down to your faster time frame, entry time frame, grab that trap off that low, get those buyers, get those bears roped in off the moving average. Once those bears get short, you've got their stops, and you can pound it going back higher here again. Two-try failure into that trap, that failure and that pullback combo. Again, you'll learn more about that stuff. See examples of that inside of that free trading course. How about a breakout going lower? How do we break or going lower? Not going to be easy. Let's talk about some breakouts though on the Nasdaq, because the Nasdaq has a whole lot more breakout potential than the S&P. Let's grab a look at the Nasdaq here coming up next. S&P, nice and bullish as far as rotation. Look at the Nasdaq. Now the Nasdaq is very similar to the S&P, but you'll notice there's only one range on this chart, right? It's the same basic idea. It's a bull market into a trading range. One of the benefits of the Nasdaq is we almost have a time expiration on this one because of this triangle. One of the nice things about a triangle is that once we get to where that triangle comes together, you can almost guarantee we're going to get some sort of breakout. Ranges can keep on going and going and going, but a triangle, generally speaking, obviously there's exceptions to every rule, but generally speaking, once this triangle gets to its vertex point, you're going to get some explosiveness. And so when we get that triangle coming together, be ready for that, potential breakout here for tomorrow. The one thing that we really don't have on the S&P is kind of that multi-range environment. That's one key difference here. Really at this point, we are bullish into a trading range. You can easily see here right now that the rotation was working great. It rotated lower, it rotated higher. These are pretty much symmetrical rotations back and forth. But look what happened here. You notice they failed that rotation. Market loves to rotate back and forth, except for apparently recently. Again, not a very bearish clue. It's a pretty bullish clue as far as failed rotation wants, right? So bullish in a range. And I think, again, on this one, there really aren't any good options to be a seller on this. It's really all bulls at this time. Now, again, this could change, and I would imagine the NASDAQ is probably consolidating mostly because, again, tomorrow we've got a ton of earnings tomorrow, right? We got everything from Twitter, Apple, Amazon, Intel. So there's a lot of tech companies that are reporting tomorrow, which I'm sure is kind of why this NASDAQ has that kind of narrowing triangle coming together. It's kind of consolidating ahead of what should be a potentially very explosive session on the NQ for tomorrow. What do buyers want right now? Oh, buyers want breakouts. I mean, look at how much open space they have above them before we run back into resistance, right? Buyers are loving on the idea of a breakout going up to that 13,555. What else do buyers want? Buyers would love to buy off of these lows. And the exact same thing we talked about on the S&P. How about the sellers? I'll tell you right now, very difficult to want to be a seller as we go higher here, again, because of that failed rotation. Is it impossible? No, nothing's impossible, but we have to be careful to sell off of that high. The sellers also have some trouble as we go lower. Right? Do I want to sell a pullback? No. This is a horrible place to sell down here. I have expanding triangle support. I have gap support. I have major low support. Now, if the bears can break below this 12,800, this is one area where we have a lot more open space. See, I would not like to be a seller on the S&P below that range. On the NASDAQ, though, it's blue skies, baby. There's plenty of space down there between 12,800 and 12,420. So I think the bears have a lot more options right now on the NASDAQ. Still, though, very limited. Still very limited as far as I'm concerned. Now, we talked about on the E-mini, we talked about how if we go up and hold the pullback, it's a breakout. We go up, we hold the pullback, it's a breakout. Okay, they didn't get it done the first two times today. Can we do it? Can we do it tomorrow? Right? Do they go up? Do they hold that pullback? And do we get that breakout going higher? What do we call those? These are called 1, 2, 3 moves. So 1, 2, 3 breakout. Mark off that high. Don't chase it. Mark off that low. Drill down. Find those prior swings. Guys, the best money you're going to make in a breakout is that first test trap. What's the first test trap? A first test trap is a trap setup, which you guys will learn all about in that free trading course, but it's the first pullback off that channel low, right? See how that's the first little test right there? A first test trap, my favorite trades, and again, size of the first leg, size of the third leg, that'll give you a good, easy way to refine that final target. I also think, again, because of that big move down yesterday, if this was to pop up and begin to grind, this is easy pickings. Grab that trend line nice and tight off the high, find that channel, drill down, find those traps, find those failures, those pullback combos. First leg, third leg, right? Usually going to be a very easy target there. Those we talked about before on the S&P 500. Here's another one that I think is very possible for tomorrow, and that of course is a two-try breakout. Two-try breakouts are very, very common, and that is a strong pop-up, a shallow pullback, a higher high in price, and a trap. We call these two-try traps or two-try breakouts. They're very, very simple patterns. Anytime we see a real strong pop, okay, and this is where the first leg needs to be really strong. Okay, keep in mind, on a 1-2-3 breakout, it doesn't matter how strong that first leg is, right? It doesn't matter how strong that first leg is. It has to hold that pullback, okay? But on a two-try breakout, it'll break and really pop. You know what I mean? It'll really blow right through these highs. Very strong move up. Shallow pullback off the moving average. That shallow pullback doesn't allow any of the fib buyers, the dip buyers, nobody's able to get into that trade. And so it creates all this FOMO in the market. And when you get that higher high, the higher high basically confirms it's not one of these. You know, it's not just a V top and back down in. So again, strong move up, shallow pullback drives the buyers nuts because they can't get into the pullback. The higher high confirms the move. And then, of course, that little swing right there. Everybody wants that entry at that point. You know, we really should call this the FOMO trade because of what it is, right? It's a trade that works well because of the FOMO, the fear of missing out on that next pullback. We call those two-try breakouts or two-try traps in our trade room. Really, really powerful setup. And again, we know where the market wants to go, up around that 13,550. I've got one more breakout pattern we'll talk about, but I'll save that for last on the crude oil. I think it will also apply here to the Nasdaq as well. As we go higher here, can I sell off these highs here? We can definitely sell off these highs, but I'd be very smart right now because of that failed rotation, right? Because of that rotation going higher here, and really because of the lack of options right now for any of their sells. I would like to get that same kind of idea we talked about before, which is as we go higher here, the ideal scenario, don't get me wrong, the most aggressive way to do this will be a crown reversal, which means the buyers try once, the buyers try twice. It's a trap high and a reversal back down. That's a crown reversal. Okay, crown reversals are good when we haven't retested yet. Again, though, because we have this bullish clue, that failed rotation, if we do end up going higher here and pulling back, I would like to ideally see us pull back, retest that high. Mission accomplished now for the buyers because the buyers want to retest, and then we can come in, we can trap those buyers in now. One try for the buyers, two try for the buyers. All their stops now are sitting right below that low. What I'll do is I'll draw a little trend line off that low, up around that high, find that little hidden channel up there, look for a nice, strong red signal candle, and sell back down into that trading range. Now, on this chart, you'll notice we have some rising support trend lines, so you got to be kind of careful with these rising support trend lines because, of course, the follow-up channel here might be a little bit too, might be a little bit too close for comfort on that follow-up trade. Obviously, things can change. This is kind of a liquid situation, but that's kind of what comes to mind here. Looking at those rising support trend lines, I would definitely like the two-try failure, but just be aware of that rising support if you're going in trying to get that first test is the best test off the high of that new channel. Okay, those are the ways in which we'll sell this thing as it goes. Obviously, if we go back down again, this is a much better trade here for the buyers down here. Same idea, right? Bears try once, bears try twice. Again, we want to be a buyer because we're at support with a range below us. But you have to remember that when a market rotates off the high of a trading range, it creates a lot of momentum going. And remember, momentum is our best friend as a trader. Momentum is what makes us, is what gives us lucky bounces. Momentum gives us the edge that we need. I don't have any edge down here to be a buyer. So the only way I get that edge for my trading is I have to use the stop loss. I got to use the sellers and their exits for my own advantage, if that makes any sense, right? If I have momentum on my side, I already have the advantage. I have the edge. Okay, I don't need stops to help me. They definitely won't hurt. But if I'm trying to go against the momentum of this market, then yeah, I need to get something else, some gasoline on this, something to give me that edge. And that's why I like to trap in those bears. Get those, right? Get that fuel that we need, that edge that we need to send this market hopefully whipping higher here. And remember on this, if we can get that two-try failure, draw that trend line, find that nice signal candle, and grab that pop. Now, again, remember, as we come down here, there's a triangle involved. So there definitely could be some trend lines up overhead. As long as we can get in and out of that one-to-one first target before we get there, you'll be fine. Mark up that high, mark up that low. Obviously, I'm simplifying this a little bit right now, but we're grabbing that first pullback. I say pullback. It's a trap setup. It's a failure setup. It's a pullback combo as we come off of, right, that new channel. Again, be aware of your surroundings, though. If you take that first pullback and you're running right into that trend line, just be aware it's probably not going to be as consistent or dependable as we'd like it to be. So be aware of that off of the low. How about a breakout going lower, though? What would a breakout look like? So basically, let's say, for example, because again, there's a ton of open space down here. If we can get down to these lows, if we can actually hold this breakout and jump, then absolutely, we can trade a breakout. But remember, it doesn't matter how strong the move lower is. They have to hold that breakout and go. It doesn't matter if this thing sinks all the way back down to that low. I don't care how strong that move down is. We see a lot of times where it will literally collapse and then bears get stuck and it spikes right back up again. That happens all the time in range-bound markets. So if we do end up back at those lows, promise me you're not going to try to cheat on this. Wait for that pullback. If they try once, twice, buy that sucker right back up into that trading range. If they don't, though, and we push through, then that becomes, of course, that 1, 2, 3 breakout move. Whenever we see that acceleration off the moving average, breaking free of this range, right? Breaking free of that trading range. Now, we don't chase it. You want to chase it. You want to sell high, sell at resistance. So we mark up a low off those lows, find that channel high. Again, I drilled down. This is a 5,000 tick chart. We're not trading a 5,000 tick chart. Definitely not on the Nasdaq or the mini Nasdaq or the micro Nasdaq. Find those prior swings, again, on your faster time frame, and you'll see those in that free trading course I mentioned earlier. Grab those prior swings. Think about getting above that. Remember I said earlier, that first test trap, right? That's the first test of that channel, first test trap. Buyers come in, they try to buy off the moving average. They are stuck on the wrong side of that momentum, and we look for that next leg going lower. Where do we think this market wants to go? Well, again, first leg and third leg are usually pretty darn accurate as far as predicting where this breakout move will go. If I had to guess, though, if this is all fueled by earnings tomorrow, I would imagine that 420 area, that is a major top from back late in the year of 2020, right? It's pretty incredible how far back that goes. So we definitely have a potential for a breakout, but again, as we get down here, just be careful. You really want to make sure the breakout is confirmed. And remember, this could easily be a move. We could easily see something like this where it goes lower. They get a what looks like a 1, 2, 3 breakout going down, but it still runs right into that area here. At that point, draw that trend line down. Make sure you've got the 1, the 2, and try to use that trend line to your advantage. Make sense? So even if they get that 1, 2, 3 move going lower here, we're still in and around this low. The range is still intact as far as I'm concerned. This will simply be just the sellers getting what they wanted from yesterday, that retest of that low. And then again, make sure you look left, find that trend line, okay? And again, we'll go over all these rules in the trade room tomorrow. Find that trend line, again, wrap in those bears and hit those stops, right? Hit them right where it hurts and go right back into that range. Or does it come down, hold, and then maybe it does this, right? Maybe it pops and grinds. That is a possibility too. So it may go 1, 2, 3 breakout, and it may just kind of slingshot and keep grinding down. That will be fine too, right? So we make our move lower, we pop down, and now we're kind of grinding, right? This will probably be kind of a runaway market feeling. We saw yesterday. Remember yesterday how the market has spit and then just kept on grinding down, right? Like that, right? If it pops and grinds like that, you draw that channel nice and tight, right? And then grab that short off the high of the channel. Same thing over here. So if we do end up all the way at those lows, watch that pop and that grind down, find that tight channel, right? And then grab that first test from there, grab that trap, grab that failure. Again, I'm not going to go into all those details right now, but that's the idea behind that breakout going lower. Just be very careful trying to sell into that low. It's a big, big no-no as far as a range market, even if it's a very bear overall trend. It's not a very good spot to be a seller. All right, looking good there on the NASDAQ. S&P's all done. Let's wrap things up here. The Texas Tea, the crude oil futures, the black gold, as they say. What's going on right now on oil? So oil, if you've been watching the first part of this video, you probably can tell what I'm going to say right now on the last part of this video. What's the most important factor here right now? Well, first of all, great example from last night. We talked about how that big move up, if they double top, remember, retest the high, and then what? 1, 2, sell back down again. Make sense? Right? This is exactly the pattern that you'd want to see on the S&P and the NASDAQ tomorrow. Right? Where, again, get that nice rotation, retest the high, buyers mission accomplished. Now, these are inexperienced buyers right here, right? Those are buyers coming in, trying once, trying twice, draw that hidden channel, right? And then grab that short, going back down again. Now, obviously, this ended up really being into a range here, right? This kind of turns into a range at this point. And really what happens is it's a bull market now into a range. We break below it. Notice how it's a very strong move down. It's a really strong breakout. So if you want to buy that failure, what would you do? Let those bears try twice. They try once, they try twice, and they pop back up again. A lot of stuff we've talked about already, all being applied right to this chart right now. Get that 2-try failure off the high, right? And a beautiful little nested or 2-try failure there on that pullback, going back up into that trading range. Bottom line, to summarize it all up, it is a bull market right now into a trading range. We have a relatively deep pullback, and we are now trying to rotate going higher here. A lot like the NASDAQ and the S&P. There really aren't a lot of great options for the bears right now. We have some higher highs, which means we have to draw that support trend line. The only time we care about a support trend line is when we have a higher high. Makes sense, right? So that higher high is quite important to me because now this could easily be a big 1, a big 2, and a move back up as well. Okay, so this is we're trying to finish off this rotation right now, take off these highs, and potentially blast off here up to that 104, 104.35. So what do buyers want? Buyers want to buy the pullback off the trend line. Buyers want to buy the double bottom bounce. Buyers want to buy the breakout going higher. And I would imagine if we do get that breakout going higher, I would be very surprised if this pendulum swing stops this market because we have a big round number at 105. And let's not forget, there's also one big range over here. And so if we can slingshot back higher here, it seems quite obvious we're going to probably bury that 105.50 area, I would imagine. Unless there's something that comes out tomorrow afternoon that kind of stalls this thing out here. But I would imagine those buyers, if they can get this thing pushing higher here, could easily slingshot up to that 105. The pendulum at this point is kind of a formality in my eyes. I wouldn't anticipate that pendulum swing being much more than a wet paper napkin or something like that. You know what I mean? It may stall things for a little bit, but I doubt it will. I doubt it will stop that slingshot kind of coming off of that low here. But the bears, what do the bears want? I'll tell you, the bears have a tough time right now. They have a tough time because if they want to sell off this high, they're doing it right in the meat of that range. And there's a trend line right here. This is not a very easy place to short. So, and of course, as the market rolls higher here, it's not going to be easy to sell short up there either. All that momentum, Okay, as we go lower, though, I'll tell you, if the bears, and we talked this last night, right? We kind of look at this as a very potential turning point in the market. We mentioned this last night, but you'll notice if the bears, which had that big move down on Monday, if they can take control of this, I'll tell you, there's not much standing in their way to go back down to those lows. You know, it may take 2 days to get there, but I would imagine the bears have one thing on their mind, and that is to retest those big lows from Monday morning or Monday, afternoon, right? That 95 and a quarter low down there. So there's definitely potential here for the bears right now, but they got to wait. It's definitely a game of patience right now, really across the board. NASDAQ, S&P, and crude oil. So going higher here right now. We've talked a lot about most of this stuff already. We've talked about a 1, 2, 3 breakout, find that channel and buy that first test. We talked about this already. We've talked about a pop and a grind going higher. Love that setup. Trap off that low, failure, and keep it going, right? 105 is the option. We've talked about a 2-try trap, a strong move up, shallow pullback to the moving average, a higher high in price, traps, baby. That's a great setup as well. All those will work. Another one I like, which we haven't talked about yet already, is imagine now that this area right here, imagine this now is a buy zone. Okay, so now this becomes green. So now we have a break higher, a quick pullback below the moving average, and one of those classic failure into pullback combinations, right? A failure into pullback combo. So now, imagine now, this, what is resistance, becomes an area of support. It's a very simple idea of a breakout pullback. The key, of course, will be, the key is always, get the moving average. Okay, get the moving average above those highs. An easy way to know if this breakout is strong enough for a breakout pullback is use the moving average. The moving average, if the moving average can clear above that high, you're pretty much set to go. But if you see a breakout and the moving average can't even get above that high, you probably don't have enough juice on this move. You know what I'm saying? Right? So that's kind of one easy giveaway there. So we want to see a strong enough move. How strong? Strong enough to get that moving average up above those highs at 103, 102.99. And then again, in this particular setup, we almost V-top, right? We go up and we come crashing right back down and we hold off that high. At this point, we're hoping the bears will come in and try to short this thing back down again. I made this mistake all the time when I was a rookie trader, thinking that V-top was some sort of reversal of some sorts. But now we know better. I know better now. Anytime we see a strong move in one direction, we expect a retest of that high. So if I can get a strong pop higher, okay, and a sharp pullback, trap in those bears with a failure setup, grab that first pullback off the moving average, put your target up right at that high, and I would definitely leave that runner. I would definitely the runner, because when it comes to a breakout legs are the measuring leg. So this leg right here can be used here as the measuring leg. Remember, when we have a breakout, the breakout leg is the measuring leg. If we have a trend, it's 1, 2, 3, first leg and third leg are very symmetrical. So I would definitely leave a runner up there, at least up to that 105, 105.50 level we talked about a moment ago. As we go higher here, I would think the same thing applies as we talked about on the S&P and the Nasdaq. I don't feel comfortable selling right into it. Remember what happened back here, right? We had a strong move up. They double top, and then we get the 1, the 2. That is a really good short in a very bull market, right? The most aggressive setup you could possibly use would be a crown reversal. And that is, as we pull back, the buyers try once, the buyers try twice. It's a trap above that high and back down. Okay, those are the most aggressive ways to do this, because again, they're going to want to retest that high. Now, by now maybe you're saying, well, wait a second, it's a range, so why can't I be aggressive? Because of momentum. Remember, this is a trend line right here. There's a lot of reasons that bears going to be careful on that kind of slingshot spitting out these highs right now. The best, kind of the most reliable way to do it is wait for that pull back, let them retest, and then 1, 2, drop it back in, and then remember, watch that trend line, right? Because that trend line could easily, now see, this is interesting, because at this point, we may get those bears now trapped in again, and we may get a failure right there again, right? Like you can easily see that setting up a mile away. I don't hate the 2-try failure off the high. I really don't like that short though off that trend and that trend line, obviously, right? Gotta be careful on that as we go. So watch that trend line, coming up. Okay. Now, as we go lower here, I really like the idea of this being a 1, 2, and a long. The problem we have though is we have a great support level, but we're right in the meat of this trading range. So what's the best way to buy this on a shallow pullback? Shallow pullback. If you watch this video every evening, you know the answer to this. What's the setup you use in a shallow pullback? A trap. Why? Because traps are the way to buy nice and low. So let those bears try twice, grab a trap setup, and buy that with confidence, right? Trend line coming off that low. The key though is, again, we don't want to get too aggressive buying too high in that scenario because you're buying inside that trading range. Ideally, you want to stay out of the middle of that range. What will happen a lot of times is a lot of times the market will do this. You'll get that failure. It'll try to go higher, but because it's in the range, it'll kick back out of that range, and professionals, which you now fall into the category, right, are going to buy that trap below the range. Make sense? So skip the failure, just the regular failure, grab that trap entry and use that trend line to punch it higher. I like that trade a lot because, again, it's kind of like a big 2-try failure going back higher with a little micro trap entry to use for the signal. Make sense? Okay, as we go lower, if we retest that low, what's the game plan now? Oh, now the fun starts, right? Now it's 1, now it's 2, hit those stops, grab that new channel. I mean, really, this is almost the easiest trade for the buyers, right? Because if we can take out that low again, it's a relatively strong move down there. If we take out that low, now keep in mind, there's no more trend line anymore, right? That trend line's gone now. If we retest that low, 1 try, 2 try, all those stops now are sitting right there. We buy into stops, we grab that trap, that failure, that pullback, and blammo, hopefully now. And now, as we go higher, we slingshot higher, pop and grind, right? Find that new channel, right? All the breakout patterns now are breaking out, going higher, pop and grind breakout, 1, 2, 3 breakout, 2 try breakout pullback. You know what I'm saying? Okay, that's like I said, this is probably the best possible scenario. It allows us to buy nice and low and potentially really rotate this thing nice and higher. How do we sell it here? Well, we get a breakout, right? Got to go down. We got to pull back. We have to hold that break and go. 1, 2, 3 breakout. Find that channel and go from there. That's a pretty easy one, right? Or maybe this thing slingshots and grinds. Again, we'd be happy to get that tomorrow. It's a great setup. Find that new channel. Find that big high. Grab that first test trap or that buyer failure and hit them where it hurts, right? Or maybe we get that real strong move. Something comes out, right? News comes out. The market pummels lower. Strong move down. Shallow pullback. Lower low. Traps, baby. Another great 2-try trap example down there. All right, guys. I'm not quite sure about a breakout pullback. A breakout pullback probably not going to be as easy. That breakdown, that pullback, that's more likely to snap back up, right? So I'd be definitely careful with a breakout pullback on that. But the rest of those breakout patterns, I do like a lot as we go lower. Because again, the bears have one thing on their mind tomorrow if they can get that breakout, and that is to bury that 95 area and finish unfinished business they had from earlier on this week. We'll see. We'll see. Again, this is just one of 3 markets that does not have a lot of options right now for the sellers. But hey, tomorrow's a brand new day. And speaking of tomorrow, guys, this is the easy part. This is the fun part tonight, right? Tonight we plan our trades. Tomorrow we trade our plan, and we're going to do it together tomorrow in our trade room. If you're sick of missing the best trades each day, or you're taking too many losses, making too many mental mistakes, or maybe you want a place to learn and trade along to make sure you're doing it right, do it the right way the first time, you're going to love our trade room. We're open every morning, 8 o'clock Eastern time. We trade oil, gold, S&P, NASDAQ. I'll put all the membership links, all the free course links, all the trade room links in the description of the YouTube video. So grab those links, get registered, and learn the strategy. And I'll see you guys tomorrow morning at the opening bell in the trade room. If not, come back and join me tomorrow night. We'll run it back and we'll do it again, getting ready for a Friday trading session. Don't be afraid to call the office. I know I do speak pretty quickly on these videos. YouTube kind of makes me go as fast as I can, keep the length a little bit smaller, but I'd be glad to slow it down, make sure we have all the pieces put together, the computer, the software, the trade account, get everything ready to go so you're ready for trading with us every day in our trade room. So call the office if you have any questions. Don't be afraid to drop those comments in the comment section below. And if you enjoyed the video, hit that like button, give me a subscribe, share this information with a friend. One of the best parts about trading is the more people trade this strategy, the better it works. So the well never runs dry. But for now, though, let's get out of here. Enjoy the rest of your evening. I will hopefully see you tomorrow morning, and we'll trade together in the trade room. If not, we'll see you guys tomorrow night, same time, same place. Enjoy the rest of your evening, guys. My name is Joseph. Be well, be nice to each other, and be here tomorrow. Adios, amigos. Bye-bye for now.